Hey everyone, welcome to another episode with Rashid. Today we're going to cover some of the most common questions we get around this time of the year. It's October 3rd, and that means we're about 27 days away from open enrollment, which starts on November 1st. Just a quick reminder, you can start shopping for health plans in November, but those plans won't take effect until January 1st. For anyone without health insurance right now who needs coverage sooner, feel free to reach out. You can call me at 407 588 0505 or visit onebettercare.com and fill out the form by clicking the Get a Quote button. Please make sure to answer the questions on there as accurately as possible so I can prepare the best options for you ahead of time before we talk. Today, we're tackling one of the most frequently asked questions, which is should I renew the plan I had last year or should I shop for a new one? To answer this question, I will have to break down my answer into four parts based on how each category of people are currently getting their health coverage. Let's start with the most common group. These are people who get health insurance through their employer. If you haven't received any updates from your HR department about changes for the upcoming year, it's likely that your plan will stay the same. However, be aware that if your company decides to switch providers, you should get a notification explaining the new plan options. Now, here's an important detail. Many people don't realize that the amount deducted from their paycheck typically is only 40 to 50% of the total cost of their health insurance premium. Your employer usually pays the other 50 to 60%. This is why I always say that employer sponsored health insurance is most of the time the best deal you can get since it is heavily subsidized. I do not recommend opting out just to try to lower your monthly premium because you'd likely end up with a lower quality plan that is likely not going to cover everything you need, which will cost you more money out of your pocket when you have to use it. If you're covering family members through your work insurance, that's where the cost really jumps. While your employer helps cover your premium, they don't contribute to the cost for your spouse or children, so you're paying 100% of their premium. That's how you get a huge increase in your employer health insurance premium when you add your spouse and kids. If you feel like that's a lot of money, you're not wrong. In this case, I recommend you don't automatically renew the coverage for the entire family. Instead, look into separate options for your spouse and kids while you stick with your employer sponsored plan, which is likely the best deal for you personally. The second group is those who are getting health coverage through Medicaid, which is a state organized healthcare program for low income families and individuals. If you're enrolled in Medicaid, the process is simple. You usually don't need to renew it manually. Medicaid coverage automatically continues as long as your household size and income stays within the qualifying limits. However, I do want to caution you, if you receive phone calls telling you to reapply or submit an application for Medicaid, be careful. These calls are often from telemarketers trying to gather your information to sell it to insurance agents. If you're happy with your Medicaid coverage and your financial or family situation hasn't changed, there's no need to reapply. Having said that, it's important to update your income with Medicaid if it has changed. If you fail to report a significant increase, you may lose Medicaid coverage or owe the government money. On the other hand, if your income only increased slightly, you may still qualify for full Medicaid or shift to the marketplace or Obamacare for you and your spouse, while your children could remain covered under CHIP, Children's Health Insurance Program. Now, The third group includes people who don't get health insurance through their employer because they work for small companies that can't afford or don't qualify for group plans, or those who are self-employed like independent contractors, massage therapists, hair or nail salon technicians, makeup artists, realtors, home inspectors, attorneys, owner operator, truck drivers, and so on. If you fall within this category and you have an Obamacare plan, I recommend you do not automatically renew it without reviewing your options first. And here are 4 reasons why. Reason number 1, healthcare cost increase. Healthcare costs can go up, especially during tough economic times. If your insurance company raises the price of your plan, you could be surprised by a big increase in your premium. For example, if your current plan costs $50 a month and the insurance company increases that by $200, you'll suddenly be paying $250 a month without even realizing it if you're on auto renew. Reason number 2, changes in government subsidies. The amount of subsidy or tax credit you receive to lower your premium can also change. For example, if you qualified for a $1,000 tax credit last year, but this year the government reduces that to $800. Even if your plan's price stays the same, you'll still end up paying the difference, which is $200 per month. This is why it's crucial to review your plan every year. Reason number 3, personal changes. If your income or family size changes and you don't update your application, you could be paying more than you should. For example, if your income decreases or your family size shrinks, you may qualify for a cheaper plan or even a free one. So, failing to update your info can cause you to miss out on savings. A quick example is a young lady who kept using her plan that she had before she got married. After she filed her taxes the following year, she was found ineligible for the same tax credit. Her subsidy amount was a little over $400 per month. This mistake costed her around $5,000 in back taxes because she did not report her marriage status and continued to use a plan for the whole year. Reason number 4, zip code change. If you've moved to a different area, not updating your zip code can result in incorrect billing. Your premium may change depending on the area's healthcare costs. I've seen cases where clients move from one zip code to another, and the cost of the same plan jumps simply because healthcare is more expensive in their new area. If you don't update this information, the government might find out later and you could end up owing money for overpayments and subsidies. Now, let's talk about those who have private health insurance or are considering to get a private health coverage plan. When it comes to private insurance, the question of whether to renew your plan or shop for a new one is a bit different compared to marketplace plans. Private insurance operates outside of the government subsidized marketplace, meaning it's not tied to the same annual changes in subsidies or plan offerings. So, for those who don't qualify for a significant tax credit, private insurance can be a smart alternative. Why do I say that? Well, unlike marketplace plans, which are usually heavily subsidized by the government, private insurance is not. This means you're paying the full premium without help from tax credits or subsidies. However, if you don't qualify for a substantial subsidy, say you're self-employed or earn above the threshold for assistance, private insurance could actually save you money in the long run. Here's how. Private insurance is particularly beneficial for individuals who don't need frequent medical care but want solid coverage for outpatient procedures, diagnostic testing, x-rays, MRIs, accidental injuries, and God forbid, in case of a catastrophic event or unpredictable bad diagnosis, like cancer, for example. These plans are typically structured to be cost-effective for relatively healthy people who don't need regular doctor visits or expensive treatments for ongoing or terminal conditions. For example, if you only need to see a doctor for the occasional checkup or diagnostic test, private insurance often offers lower premiums and better rates for these services compared to marketplace plans. Additionally, private insurance networks tend to be more robust, giving you access to a wider range of doctors and specialists. In fact, private insurance networks are often broader than those offered through Obamacare plans, meaning you'll have more flexibility in choosing healthcare providers. On top of that, there is no need to shop for a new plan every year. You see, one key difference with private insurance is that you typically don't need to shop for a new plan every year. The plans are designed to be more stable without the year-to-year fluctuations in price or coverage that you often see with marketplace plans. This can provide peace of mind knowing you have consistent coverage without the need to reevaluate your options each year. So now you might be thinking, is private insurance right for me? Unfortunately, private insurance is not for everyone. These plans are best suited for individuals who are relatively healthy and don't require coverage for major illnesses or frequent follow ups for existing health conditions. If you're managing a chronic illness or need ongoing care, marketplace plans with government subsidies may offer better coverage for those specific needs. But if you're in good health and mainly looking for coverage in case of emergencies, outpatient procedures, or the occasional diagnostic test, private insurance can offer significant savings while providing access to a stronger network of healthcare providers. To conclude, I will say this. If you don't qualify for significant subsidies and are considering private insurance, it's definitely worth exploring as a long-term option. You won't need to shop for a new plan every year, and it could save you a lot of money if your health needs are relatively simple. Uh, if you're interested in finding out whether private insurance is the right fit for you or not, feel free to reach out. I'd be more than happy to help you navigate your options. Finally, if you don't qualify for significant subsidies and are considering private insurance, it's definitely worth exploring as a long term option. You won't need to shop for a new plan every year, and it could save you a lot of money if your health needs are relatively simple. If you're interested in seeing if private insurance is the right fit for you, feel free to reach out and I'd be happy to help you navigate your options. Thank you for watching. If you like this video, please give it thumbs up so it can reach more people like you. If you have any questions, please leave them in the comment section below and I will make sure to answer them in my upcoming video. To get notified every time I post a new video, consider subscribing to this channel and ring the bell. I will see you in the next one.